Joe Jacobs here, continuing to give you some more information here on the real estate market. And what I actually want to talk about a little bit today is about mortgages. And what I want to talk about is what you should watch out for when you're shopping for a mortgage. Whether it be refinancing or you're out getting pre-approved, a lot of these things are things that you just want to watch out for when shopping. So the first one is lenders. They really shouldn't be trying to do household budgets with you. It's really about understanding what your income is and then basing your qualifications on what your actual documented income is. So if they're giving you information based on what you're saying or whatnot, that's not very it's not going to help you out. The next thing is, if you get to the place where you're looking to lock in a rate or being quoted a rate, be careful if you're paying a lot of points, or if they're not explaining to you what points are. And essentially, points it's prepaying your interest in advance. It's basically a loan fee that you pay to get a lower than normal interest rate for that time. And anything over 2 points, you want to watch out. Any excessive loan costs, you want to be anywhere between 2 and 5% of the total amount of the loan. That's if you start getting over that, it could be an excessive fee. So you want to find out, you may want to be careful. Prepayment penalties is another one to look out for. Most loans out there right now do not have a prepayment penalty out there. But if your loan officer doesn't say anything to you or confirm that you do not, or when you're signing your loan documents at the end or you're reviewing the disclosures, please make sure that there is no prepayment penalty. And if there is, that you're okay with it. Any broker who inflates the interest rate, you just want to be careful with that. You also want to be careful with any lender that says bad credit doesn't matter. Bad credit does have an impact, and their ability to explain how certain credit scores impact the type of loan programs you qualify for and the type of rates you can get. If they're saying it doesn't matter, you got to be careful. Balloon payments, basically, if you get a loan where you're being quoted a low rate for an amount of time, but then there's a balloon payment, and in your disclosure, there should be something in there that says whether or not there is a balloon payment. If there is, what essentially happens is you're going to be making a lower payment for 5 to maybe up to 15 years, and then boom, you have one big lump sum payment that needs to be made. So again, be careful for this. If you see balloon payment, you want to watch out. An inflated opinion of what they think the home would be valued at, what it would appraise for. The reason that's important is sometimes what happens is if they're basing what rate and fees they can give you on the value of your home compared to what the amount of the loan is you're taking out. Therefore, you want to find out what they're using as their estimate for your home, because if the actual appraisal comes back any less than what was agreed upon, you could impact your interest rate or your fees to get the loan. Another one, your good faith estimate. You should be getting provided a good faith estimate. It's a federal form that's required to disclose the amount of fees based on that date that they quote you an interest rate. So your rate, your fees, how long your goods locked for, all those things. So make sure that when you're working with a lender that you do actually get this good faith estimate, and also that they're explaining it to you. You shouldn't be walking in there getting told a bunch of things and not having any explanation about what it is. So anyways, if you're out looking for a mortgage, please make sure that you're watching out for these types of things.